Hello and welcome to the Weekend Investing Daily Bite of 2nd of May. Good start to the month. We bounced very strong in the morning, gave back most of the gains of the morning. Lingering concerns still on external trade. Donald Trump coming out today and saying that if anybody buys anything from Iran, we will sanction them. So India buys oil from Iran, China buys oil from Iran. Um, Again, very conflicting news items coming from the White House. On one hand, there was a news that uh, USA and China are close to some sort of at least starting to talk. And today we have this. But the good part of today's news was the good GST collections. The foreign fund flows continues to come in. There was news that domestic institutions for a after a very long time, the holding of Indian equity for domestic institutions has gone beyond foreign investors, which also is a great sign. So slowly but steadily, confidence is coming back. Um, the numbers are reasonably, talking the narrative. Today's topic is going to be, will the dollars fall help India? We'll study the history, how we have done in the past, and whether the current sort of scenario can help India. Disclaimer, as always, please read fully and please subscribe to the channel. I have noticed that a lot of you are coming very regularly to the channel but are not subscribing to it. Please do this additional step. It gives us a lot of motivation. Where is the market headed? Nifty absolutely flat. It did try its best to cross 24,500 but was shut down. Last few days we've taken support at the high of previous two peaks, which is very good. And today the message is that wait and consolidate here for some more time, which is fine. So Nifty absolutely flat. Nifty Junior also absolutely flat at minus 0.12%. Mid cap slightly down at minus 0.68%, and small caps down absolutely flat minus 0.03%. So markets is in wait and watch mode right now. FI flow continues, domestic flows also continues. Bank Nifty absolutely flat. What is the next trigger going to be is the question. Is it going to be the Indo-US deal, or is it going to be some sort of news of attack on Pakistan? Yet to be seen. Gold has taken some support near the 40 DMA, around 93,800. Our expectation is that maybe it will come down to 91,000 at best. Market breadth slightly better than the previous sessions, 214 to 286. Still not so good as we would like it. Bajaj Finance, Adani Ports, some of the gainers today. Reliance also gaining along with State Bank of India. And we had some small losers in Kotak Bank, Bharti Airtel, Bajaj Auto, and Nestle on the Nifty. On the Nifty next 50, you had some deeper cuts in Swiggy. So Zomato or Eternal came out with results, and that stock actually went up, whereas Swiggy was broken down. And you had some cuts in FMCG stocks. IOC after its good results perking up, TVS after good results perking up, Indian Hotel doing well, DLF also doing well. Mixed bag for the day. Sectoral trends, you had best sector today was oil and gas at 0.7%. Worst was defense. So defense, some profit booking is coming in. Central public sector enterprise down 1%. Metals down 0.7%. Pharma also down 0.7%. No big deals in any particular sector. But oil and gas has taken some support and going up. Oil and gas is looking all right. Although crude oil is not really pointing to some great global growth. Crude oil is a great front runner for global recession, and crude oil prices are not really giving too much confidence going forward. Nevertheless, the good results of Indian oil are helping the sector. Let's dive into the dollar impact on India. So the Trump dollar dilemma is weak dollar good or is weak dollar bad. So for years, Trump has pushed for a weak dollar in his first uh, presidentship as well, and now very vocally, very setting the narrative that US wants the US dollar to go down, and the US dollar index has dropped about 10%, going from 110, and it broke this very important support near 100, broke it and went to 98, then came back and has in fact retested uh, this breakdown. And if we now break down again and go below 98, I think it's going to be a very sharp crash if we do that, and that is something which Donald Trump also would like. Uh, So does Donald Trump really want a weak dollar? So he wants a weak dollar, but he wants the dollar to not lose its dominance. I mean, it's like asking for, I want to eat the cake and I, want to keep it as well. So what he really wants is for other currencies to strengthen or stop being artificially cheap while the trade continues to happen in the dollar. So he says that countries like China and others are manipulating their currencies to gain an unfair trade advantage. So when Trump says we need a weak dollar, it means that others should devalue their currency versus the dollar. So if we just take an example, let's say a US manufacturer makes a tractor for $10,000 and we are, as an Indian consumer, we are importing it at $1 to 83. The price for us is 8.3 lakhs. It may be too expensive for Indian buyers, but if we allow our currency to strengthen versus the dollar, let's say we go to 70 rupees to a dollar, then the price for our consumer becomes 7 lakhs, which is more affordable, and the demand can rise from our consumers. So Indian importers are likely to place larger orders if our currency is allowed to go up. US factories can ramp up production, more jobs for US folks, and export revenues improves for the US, and it helps their trade deficit. On the flip side, if let's say US imports a iPhone made in China for $1,000, when the dollar weakens, that $1,000 may cost more in yuan to import. So Apple's cost of production rises, price of iPhone in US goes to 1,050, for instance, and the US consumer in that case, which has been the case running, is that they face inflation. The company, of course, will pass on that higher cost to buyers. Import heavy sectors like electronics, pharma suffer and may lead to political backlash or reduced consumption spending for US buyers. So, this is the tariff versus the dollar weakening scenario. US wants tariffs to be up, but the dollar to weaken, yet dollar to remain the reserve currency. So, what happens now? In turbulent times, dollar usually strengthens. Whenever there is a lot of turmoil, people rush towards the dollar as the safe haven. But after the April diktat of the tariffs, the opposite is happening. The dollar has steadily come down, and US bonds have also crashed. So US yields have gone up. This is the chart of 10-year yield. So US yield started to go up immediately on announcement of tariff, which is not very good news. So normally what was happening in the past many such episodes is that whenever US markets led a trend down, so money coming out of the US markets, equity markets, it would go into treasury bonds, and when it went into treasury bonds, the yields on bonds lowered. But this time around, when stock market cracked there, money did not move into bonds. Money moved elsewhere to other safe havens. And hence there was a double panic in the US that equity is also going down and bond prices also are also going down. And that caused them to go on slightly back foot and ease this tariff warning. So foreign investors are fearing a prolonged trade war with Trump in place for the next 4 years. US exceptionalism trade is beginning to unwind. Recession bets are increasing. Just this last quarter, 2 days back, US has posted a negative quarter growth after I think 8 or 9 quarters. Uh, it is triggering aggressive foreign selling in bonds. Japan has also warned that we'll sell off the US treasuries that we have. So this is causing bond yields to rise, and in a very highly indebted world, if bond yields rise, it is not good for those in debt, and US is neck deep in debt. So this safe haven narrative that whenever there is trouble, go to US bonds, that is breaking down very heavily. So can US still be trusted as the world's safe haven? Bond markets are considered as the ultimate safe haven, but Trump tariffs are leading to a loss of trust in the US system. So blindly, countries and reserve and central banks used to pour their money into US treasuries, but now they are cautious. Now they are saying that if we are removing capital from the US equity, for instance, or US assets, we are not going to put it back in US bonds, because then again the specter of default of US on that country remains. And this is not how superpowers are expected to behave, so volatile and every day the rules of the game being changing. So this 90-day pause that has been put on tariffs basically to calm the markets, because the markets itself is revolting against the US, and that is a read that the White House has taken, that yes, we are not able to make the yields go down, and the market is revolting against what our policies is going to be. Now, how the dollar's power comes from the debt is just a small sort of infographic here, that US runs a trade deficit. So basically, it consumes more than it sends out. And it sends out the dollars basically. It buys goods and services and sends out the dollar because the world needs the dollar for growth, because that is the reserve currency. So countries export to the US, they get paid in dollars, and then they were reinvesting in US debt, that dollars, which cycle is getting broken basically. So this entire, round tripping of dollar that was happening, now there's a break in that cycle, and that dollar is not now going towards US assets or US treasury. It potentially is going towards other currencies like Swiss francs. It could be going into gold. It could go into other country bonds. And that's where the problem is, because the current major foreign holders of US treasury securities is Japan. uh, they're holding $1 trillion of treasury. China is 760, United Kingdom, Canada, France. All these guys are holding treasuries, but they're not now increasing their holding. They are gradually, not letting it roll over as that debt comes to a fruition. So the technical issue is that of confidence crisis. Trump has, really basically broken a very smooth setting that was there for this global system to perform, and the US dollar is now sort of the fragile uh, currency in the world, where everybody wants it, but nobody wants to increase their exposure. Everybody wants to reduce their exposure because the volatility of the White House has scared everybody. What if, today if we invest, tomorrow he may say, I'm not giving your money back. How does India gain out of this? So the big emerging market opportunities, as the dollar weakens, investors start to scan beyond the US. And India, being a reasonably steady growth country, becomes a prime candidate for global capital inflow. So the message for India is that we should be ready to absorb capital. What if instead of, this 30,000 crores that has come, if 300,000 crores would have come, are we able to absorb this kind of money or not? Because our markets are not so liquid, our depth of paper that is available is not so liquid. So as you can see in the table on the right, FIs have continuously bought now for the last 15 sessions, and we will get our fair share of money coming towards non-US domiciles, and that probably is a good sign for Indian equities going forward. So Indian rupee, has a problem. Like this morning, we saw rupee going to 83.5. Weaker dollar, while is good, but for the US, for us, the export is a problem. So India, if rupee strengthens beyond a certain point, it works against our export competitiveness. But then exports are, not our major sort of uh, dominant force of our GDP, and hence, this is a very tricky maneuver to have, whether we can afford a stronger rupee, which will hurt our exports and improve our imports, oil, gold that is coming in, or should RBI, intervene and cause rupee to stay weak versus the dollar, and again earn the ire of US that India may be manipulating the currency. So it's a very tricky ground. I think as soon as rupee starts to strengthen in any big way, a lot of exporters will be up in the arms, and would want government to intervene. But then again, I mean, if US is hell bent upon lowering the dollar versus other currencies, you really can't do much about that. If we see in the past how Indian markets have behaved, we did this story a few days back, just repeating it for those who missed it. In the few phases, 1985 to 92, when dollar index fell, Indian market did very well during that period. Then again, the next phase of 2 to 8, January 2 to March 8, when dollar index fell, Indian market again did very well. And now is the question whether if this is the new phase for the next many years for dollar index to fall, rupee to gain, and Indian markets to do well. I mean, that is the key question in front of us. What are your thoughts on the Trump's motive behind tariffs, and what are your thoughts on Indian rupee becoming stronger versus the dollar? Do let us know in the comments, and thank you so much for watching this. Do share these videos, and I'll see you in the next one. Bye.